What's up, YouTube? It's Max Forex speaking. I want to teach you guys how to read your market structure. It is very, very important. If you are not reading market structure properly, you will make a mess of your entire trading career. So, have you ever noticed that whenever you take trades, right, try to go in your favor a while and then reverse to hit your SL, all right? That happens because you you don't understand market structure. That happens because you have not fully mastered what a structure is. All right, that is just the piece that is missing in your trading. You have had market structure, right? So in this video, I'll be helping you guys to demystify market structure very well so that you can understand. And then I'll also break down this trade I took. All right, so let's go into structure. All right, what is structure? Everybody has their different views about market structure and all that. All right. In case you're seeing me for the first time, my name is Max Nibitroko, aka Max Forex. Welcome to my YouTube channel. Don't forget to like, subscribe, and comment. All right. I do come live probably 2 days in a week to give you guys standard information about the market. All right. So now let's look at structure. You see, obviously, they have told you guys that a bullish market structure will always be like this. All right. And then a bearish market structure will always be like this. Sorry about the background. I went to somewhere to do this video. All right. Now, and they will say that this is a break of structure and break of structure. And if you are still following this type of market structure, all right, if you are following it like this, you will not make money. So this structure is wrong. They are wrong. All right. They are not correct. That's not how the market moves. It's high time you start using how the market moves to take trades. All right. So how do we now draw a bullish market structure and how do we now draw a bearish market structure? Because that is what is missing in your trading. So technically, we are looking at market structure. Okay, we're looking at market structure today. So please, if you know it, I will advise you to pay attention so that you can understand more. All right. So we are still looking at market structure. All right, what it is and all that. So technically speaking, a typical bullish market structure must be like this. It must be like this. Please. This is how a typical bullish market structure should be. Alright. So this is a typical bullish market structure, and then this is a typical bearish market structure. Alright. Something like this. So these are two different things, alright, altogether. If you don't look at it like this, and you want to look at it like this, alright, you will make a mess of your entire trading career. So now, the problem most of you are having is that the moment you come to your chart and you see price break structure downwards like this, right? The moment you see price break structure like this, all right, you will say that that is a change of character. All right, pay attention because this is where most of you miss it. You call this a change of character, and so if you expect a price to come to an area of supply here, all right, and then you will take your trades from there, put your stop loss somewhere here, and then you'll be targeting something else. By the time you come back, price has stopped you out. It's because you are not bearish. I will explain better. All right. Now, what we are looking for after we've known that the bias is bullish, all right. If you can't identify a bullish bias, then what you need to be in. So we have this break of structure here. All right, this is a break of structure. Please, after this video, go to your chart and look at your chart again. All right. So that is a break of structure, right? You have that break of structure there, all right? So after a break of structure, you expect price to pull back, all right? Now, when price pulls back, most people will say they don't want to see price come down below certain lows. Yes, this is our external low here. That low, this low here is external. That is here you don't want price to come to, all right? If that bullish trend will continue, all right? So if that be the case, for this trend to continue bullish, price should not go lower. But price can come lower. Why? Because after a break of structure, price must take out sell side liquidity, and this is where you guys miss it. All right. Below all these lows in a bullish market, you have sell side liquidity resting there. All right. SSLS. All right. You have sell side liquidity resting there. That price must sweep. All right. So the moment you see this now, most of you, once you see that price has taken out this low now, you assume that you are bearish. You now want to sell. You'll be in profit for a while, and then later price will take you out. You are still bullish. You take note of that. We now have this break of structure here again. All right. So we have that break of structure there. All right. We have that break of structure. You expect price to pull back. Now, most traders, what they judge a trend change is the moment they see a failure swing like this. Now you can see price did this, came down, and failed to close above this. They will not say you are bearish. They want to sell. They'll be in profit for a while. By the time they come back, price has pushed to the upside because you are still bullish. All right. If this is your problem, comment it so that I will help you. All right. So this break of structure here, this one here, all right, is not a break of structure. It is a sweep of sell side liquidity. To because when price breaks structure, yes, that price will come and take money. People stop losses and all that. All right. So this is a break of structure. All right. It is not well in my program, my mentorship program. I don't only call it break of structure. Okay. So for this now, this is not just break of structure. It is break of structure and buy side sweep. Both of them it is because above this side here, alright, above this side here, you have buy side liquidity resting there. And we have a so both break of structure and buy side liquidity is the right word to do. Even alright, even that too. So I'll change this to this, alright, break of structure. So this is where you have your break of structure here. Alright. This is your break of structure and sweep of buy side liquidity. This is a sweep, all right. This is your recent higher low. So that's how the market. Until you understand it this way, my brother, you will keep on eating your stop loss back to back, back to back. All right. So it's still the same thing here. When the price is bearish, all right. When the market is bearish, you can see we have this break of structure there. We have that break of structure there. That is a break of structure and sell side liquidity sweep, right? Because below the lows, we have sell side liquidity, all right. And what happens? You can see price came up here again. Price came up here again, all right, to take out this high here. Most of you now we call that a change of character, all right. It is not a change of character. It is a buy side liquidity sweep, just like this now. So you have sell side liquidity sweep. This is a buy side sweep to continue that trend, all right. So we now have another break of structure here again. All right. We have that break of structure here. All right. Break of structure and the sweep of sell side liquidity as we call here. This is not a change of character. It is a sweep of what? Buy side liquidity. All right. So that is a sweep of buy side liquidity here. All right. This is also a break of structure. because we are looking to sell. Right? Break of structure and seek for sell side liquidity. So now you can see how this market moves. All right. The moment you understand it this way now, you will not be having problem with marking your structure. I'll go to the chart very soon. That is a break of structure and then a sell side liquidity. So price must continue like this. Take a screenshot. Take a screenshot of it. All right. Take a screenshot. All right. So this is how a typical bullish market structure is. If it is bullish, you have a break of structure, come back to sell side liquidity, break structure, come back to sweep. If it is bearish, break structure downward, go back to buy side liquidity, continue, buy side liquidity, continue. That's how the market moves. All right. So this is structure. Now let's go to the chart. This is JPY trade. You can see obviously. I think I have to hide this. Is it possible? Okay. Now, technically speaking, of course, we have checked our higher time frame that we are bullish. All right. So we are bullish. Okay. Now, so we are looking for buys. Where should you buy from? You can see that our current market structure here, we have this break of structure here, that high. All right. That is a break of structure. Let me take out of this. Okay. Let me just use it because they may not allow me to. So now, when you come to the chart, most of you, this is where you get it wrong. All right. This is where you get everything wrong. When you come to the chart, after this break of structure now, all right. Okay, let me leave now. Most of you will call this a change of character. You can see there. Like Alpha. When you come to the chart, you will see that most of it will call this a break of structure and then a change of character. All right. Most of you now, this side, this low here, what is written here will be change of character. Yeah, so that you can expect price to pull back to sell. So technically, you would prefer to buy from this, I mean, sell from that supply area. All right, you put your selling limit there, and then to you are bearish, and then you now target somewhere here. By the time you come back, price has stopped you out. Price has pushed all the way to the upside, and then stop you out. All right, you will not start wondering why. It's because you are still bullish. Up here, we have a break of structure. All right, break of structure. Price pull back to take out sell side liquidity. It has taken this out. So it took out this, all right, and push to the upside. All right, somebody who also call this a change of character. You can see we have equal lows here. That was where price swept and pushed to the upside. So the low, even this side, SSF now, some of you call it a change of character. So this is what is missing in your trading. All right. Finally, we had the break of structure. So this is our low. The lowest low, this low is our external low. That price should not take out. Okay? All right, that is our external low there. All right, that price should not take out, and then price played around sweeping sell-side liquidity here. You can see it's not break of structure. This is not a change of character. I'm just showing you where you are making a mistake. This is sell-side liquidity sweep, right? So this is more or less a break of structure and a buy-side liquidity sweep, like I said. All right. So technically, you expect after this break and see what pattern, you expect price to pull back or in which price you can see we have this certain liquidity that was swept. This was the last one I waited for. I had to set my buy limit here. All right. And then you can see price pushing. Let me show you. I also send this trade to my Telegram channel. Right. If you are seeing me for the first time, you have to follow me on YouTube, all right? Max Forex, all right? So let me show you from my Telegram channel where I posted it, all right? Let me show you. Let it open so that we can go into it. So by next week, we'll hit our TP, hopefully, okay? All right, so this is it now, okay? So you can see there, I told them, mhm, so this is it. I told them set a buy limit. Okay, let me just set set a buy limit on this DPR at 210.84, 210.844, something like that. So somewhere here, all right, 844. It was around somewhere, but I now told them to readjust because I saw this exercise liquidity, so we brought it down. All right. So now price came back here. You can see when price tapped us, you can see that exercise liquidity that price took out. Price tapped us. It was around here that I told them to set their buy limits. But I saw it, so I had to tell them to bring it down. Price tapped us nicely, and you can see the move now. All right. And then uh, this is it here. You can see how price is moving. So by next week, I'm expecting to hit my TP. So technically, what I'm trying to say is that know when it is a break of structure and a sweep of liquidity. Just know this, and have peace of mind. If the trend is bullish, after a break of structure, price will come and sweep sell side liquidity. That sweep is not a change of character. That is why most of you miss it. That is why you miss it. That's why I'm doing a video for you. All right, to help you people to help people who come to rest because most of you have lost money, you have lost that, you have lost that. So I want to see how I can help you to become profitable. All right. So um, let's go on. Let's go on. Let's go on. So that is it. Now I also did a technical analysis on GBP AUD. All right. For next week's trade. All right. Which I will take the moment price hit my TP. So why am I taking this sell? All right, from the daily time frame, obviously you can see that we are bearish. Now, this is where most of you get it wrong. Mhm. You can see here, pay attention. You can see here that assuming you come to the chart and price was here, you don't have this price action. You will call this a change of character. That is your problem. You have to change that mindset. This is not a change of character. Most of you call that a change of character. It is wrong. It is not a change of character. That is a sweep of buy side liquidity. It is not a change. Why is not a change? We have this break of structure here. This is a break of structure. Alright. Alright. So this is our external high here. This high is our external high. That is your price to take out if you want to go bullish. It's just a sweep of buy side liquidity. So that is where you miss it. It is not a change of character. So it is a buy side liquidity sweep. Alright. So take note of that. So that is why I said that once you know bias, after the break, you expect to sweep. The break, you expect to sweep and all that. So you can see that we are overall bearish. Alright. The last time we had a break of structure on the daily time frame was here. All right, it was here. All right, so this is our external low. I mean our external high, or the protected high. The price should not take out. If price takes it out, then the probability that trend has changed is high. Our external structure. All right. So now we are expecting a pullback. Okay, we are expecting price to pull back before we sell. All right, before we sell. So the point that price will come to It's not mandatory. Price may not come there, but you must have this fixed mindset that price will definitely come there. All right. So if I draw it to that low, you can see price ought to come here. All right. I have this level that I normally trade from. This level is okay for a sell. So all you are doing now on this pair now is to look for buying opportunity. The price is at discount. All right. So now let me change this to something. So this is our daily time frame point of interest. Okay. So if I go to the 4 hour now, what am I seeing? This is where I want this guy to come to. Yeah. All right. So when I come to the 4 hour time frame, all right, the equation is that on the 4 hour, you can see that we have this break of structure here. Let me take this out. This is a break of structure on C for sell side liquidity here. All right. We are expecting this guy to come here. So we want to look for buying opportunities. So technically speaking, this is where we had the break of structure. So if on the 4 hour I want price to go bullish in line with the daily time frame, price should take out this high here, pull back, and then I'll have a very nice bullish move. So I can take this because this I want to buy is because after this break of structure, you expect a pullback, but the pullback must give a structural confirmation. When price comes here, you want to wait for that price to break that high because from the daily, we have seen that this is where we want price to come to. That price must not go there. You can even catch movement within that premise. So on the 1 hour now, I saw something on the 1 hour. This where I want price to go to, not for me to sell it, all right? Because though we are bearish, all right, but we still have a daily time frame point of interest. I'm thinking about that. So this may flip, this guy may flip bullish just to prepare that pullback that will take it to that daily time frame buyer so that you can sell. So let's see how we can catch some trades. So technically speaking, you can see that as price was coming, all right, as price was coming this way, we had a break and price closed above that. All right, you can see the closure. I think it's more clear on the 30 minute. All right, it's more clear on the 30 minute. You can see the 30 minute now. All right, we have this to this great structure and price just played around to create more liquidity and then we closed above that. Came back and closed above that. So we're expecting a pullback to continue that. This is a counter trade we're taking. All right. So now where should we buy from? That's not the problem. You need to know that all these lows here, this low, this low, they contain liquidity, sell side liquidity. So even if price comes back here and close below it, it is not a change of character yet. It's just a shift. Expect the pullback to shift before you buy. Alright, so this is where you are missing it. This is where most of you make a mess of your entire trading career. Alright, you can see we have a closure. We have a closure below above that high here. We also have a closure here. So telling us that all these are just pullbacks that will take us higher. Okay. So let's continue. So now, where should you buy from? This is on the 30 minutes. If you take your Fibonacci, measure from here to that high, you can see that price will come down between 71.98 level, which is here. So this is where I ought to have sold. Yeah. However, there is something I'm seeing again. All right. This is the point that I want to sell for, which is very good. But below this low, you can see below that zone, we have a we have a fair value gap there on the 30 minutes. You see it now. So that means price will come down next week, come down, take out this guy, it's like equal lows, pull back again, come back to take out this imbalance before I buy. So the best place to keep your target so that price will tap you in is above this fair value gap. You can see if you keep it like this, exactly there, price may not tap you. So it's better you give it a space like this so that price will tap you. Okay? So that is what I'm looking at or anticipating for next week. All right. We have gotten our first week. We still have this, and then try to come and tap that second one. So for next week, I'll be expecting. If you are trading volatility, if you are trading volatility index, all right. Let me also go to your your pair and do one third analysis, and then I will call it a day. All right. So okay, let me show you from here now. Let me just pick anyone. Let me just pick 91 one years index. Now, obviously, you can see that this daily time frame is bearish. All right. Most of you, most of you will take this as a change of character. Yeah. You expect price now to come back to this zone so that you can sell. You are going to be stopped out. All right. The overall trend is still bearish. All right. Me looking at it now, it's obvious that you are bearish. But currently, price is pulling back. We will know better. All right. Let's check the 4 hour time. Now, from the 4 hour time frame, where is our major break of structure? All right. From the 4 hour time frame, there is our major break of structure. There is our major break of structure. There is our major break of structure.